As the economy faces uncertainty and a recession looms, is now the right time to buy a house in San Jose? Well, stay tuned as we get into the real data. Hi, I'm Theresa Wellman, your local San Jose, California realtor with HomeownerExperience.com. So here we are again getting into closed data through local areas, actually from the MLS, and we're going to discuss charts and history and talk about where the market is headed. So we love working with our viewers. If you're considering buying or selling, please text us at 408-839-4196. We'd love to start a conversation with you or schedule a time on our calendar, link in the description below. So let's talk a little bit about this overview of Santa Clara County market and the economy and what's coming ahead. And then we're going to dig into a little bit more specific data. So here we've got the chart that I like to show over every month from the year 2000 through today. So what you're going to notice right away in this chart is look at that increase in prices and then the big drop in prices. Now this is all of Santa Clara County, so we've seen quite an adjustment in this time frame. If you look, we're going back to almost the beginning of the pandemic and we're talking about prices right now. But there's other factors going on and San Jose is a little bit different, so we're going to get into that. Basically, supply and demand always drive the market. And our supply is at normal winter levels. We are a little higher than 2020 and 2021 winter levels, these numbers here, but we are on par for some of the previous years and definitely higher than 2018 and 2022, of course. But demand was impacted by the time of year and also the economy. So the time of year, we can see that cyclical here with the inventory and the sales and also the prices, but the economy is a little bit different from previous years. So should you really buy now? What's the forecast going to be looking like? Well, if you haven't watched my detailed forecast video of what's going to happen in 2023 in the local San Jose market, you definitely should check that out. I'll link it above and below, but we'll get into a little bit of that today. So here's just a quick overview. The after COVID economy had high inflation. We saw huge interest rate increases as the government backed off any of the help that they were doing to keep the economy going. And now they're having to rise interest rates a lot to dampen that inflation, right? Gas prices are up, layoffs have been happening. And because of all of these factors, the real estate market has cooled. But really, that's what the Federal Reserve is wanting to do, is to slow down the economy so we don't have so much inflation. Now, what happens? There's a lot of fear of all this inflation, this strong control, and then a following recession. So what happens to housing in a recession? I'm quickly going over this. We definitely go over this more in that video I mentioned, but experts are expecting a recession to be coming soon. And it doesn't mean that prices in the housing market will fall though. So I want to point out the last several recessions down here. And yes, 2008, there was a huge price adjustment. And in 1991, a tiny price adjustment, but all the other recessions, housing actually appreciated. Now, I did take a look at some more research about, are we in this recession? What's happening? And a NerdWallet had a really good article that I will share up here on the screen, but I do want to highlight one particular section. The Fed is pushing to slow the economy. The Federal Reserve, after issuing multiple interest rate increases this year, with continuing hikes expected through early 2023, is not trying to trigger a recession, but does want to slow the economy down. In December, the Fed raised rates another 0.5%, less than that was predicted as inflation showed some signs of easing. Now, lowering consumer demand is a tricky elixir intended to reverse the higher prices we face with inflation. The risk of a recession is always a possible side effect. So again, recession is a possibility, so we got to be aware of that. But that might not really affect the housing market. So let's talk about what's actually going on with the housing market, what we've seen, and what's happened so far as the feds have been increasing those interest rates. So if you've been tuning in with me before, you know that our housing prices have really adjusted. And the biggest reason is we have really expensive prices and people are taking out large jumbo loans. So those interest rate increases really hurt the pocketbook. But overall, as far as the market health, our supply is really low. Look at this. We are very close to supply and demand being equal, which I've warned before, it means that things can quickly change in the spring. We don't have much new inventory. There is some old inventory sitting. And as of January 6th, there's only 219 homes, single family homes, available in San Jose. That's a really low number. As you can see, looking back here, it is not the lowest number we've seen in December or January, but it is definitely close to that bottom number. And the demand is still really good, typical for what we would see in December. So let's look at the actual numbers. The average price in San Jose is down to $1,449 for single family homes. So ouch, that does feel like a big change from earlier this year. It is down 3.5% from November and down 10% from the December before. The sales price to list price ratio is still a little bit below asking, on par with what it was before. But here's the interesting thing. The days of inventory is still only 31, and that's because we've got that supply and demand values so close together. There's just not an excess of inventory. There's still a decent number of sales that is gobbling up the inventory we do have. So sales are down. They were 223 units, and inventory is 232 as of this data. When I looked it up, I think I said it was a little bit lower. Was it 219? Is that what I said? Yeah. 219 today. So slightly lower than what we're reporting at the end of December. But prices, yes, they've gone down, and it kind of hurts. So we've seen a 32% drop from the peak in April 2022. And that's when interest rates had just started to go up. And rates since then have gone up about 3%, affecting the budget of home buyers about 30%, which is significant at these prices. So if we're saying the prices have dropped 32% and interest rates have increased or decreased the budgets about 30%, we are now at a point which is pretty much even or maybe slightly overcompensated for those interest rates adjustments. And I can tell you, many buyers are not using that 30-year fixed rate. They are actually getting a 5-year or 7-year adjustable rate and locking it in for that short term, hoping that inflation will be under control and rates will settle a little bit more and they can refinance, or that they've built equity, or whatever the case may be. But buyers are actually getting into contract at even lower rates than there are today. November and December looked pretty typical as far as supply and demand. The prices is what hurts. So stay tuned for a brief forecast. The unemployment numbers is a huge factor to what's going to be happening here in the spring. If you like this content, please like it or comment below with your questions. I value your interaction. Okay, so here, let's look at the forecast. What do I think is going to be happening in the future and in this spring? Well, December 22, we did say that the sales and inventory was very typical for this type of time of year. But again, I pointed this out last month. The distance between the inventory and the sales is almost nothing. If we go back and look, the last several years, it was inverted, which is why we had so many multiple offers and so much overbidding. But if we go back to 2018, 2019 transition, look at that. There was a little bit of a gap, but more typical, there's a much bigger gap if we go back in time over this history. So we are not in a crazy, unhealthy, unbalanced market. Rather, we're on a normal market. So if the supply continues to remain low and demand will increase, that always happens in the spring, then there is likely to be a slight appreciation of prices this spring because unemployment is still holding at really good numbers. We're going to talk about that in a moment. So I could see that we would possibly repeat 2019. So this is 2018 where we saw a big softening in prices. The slope is obviously a little different from 2022, but the interest rate changes is also quite different than that time. But with these low numbers and change and the inventory and supply and demand, I expect to see a little bit of a bump in the spring. If you see, that's what happened in 2019, then it held through the summer and then it softened again a little bit, ending with a slight year-over-year appreciation. Now, again, if you watch my forecast video, that will only work if the unemployment numbers remain low and the inventory remains relatively normal. Here's those interest rates. We're still 2 times what we saw earlier in the year, which is really affecting those budgets. And like I mentioned before, 5 or 7 year ARMs is what people are getting into. Now, if you don't understand points to buy down your rate to make it more affordable, you definitely should check out the video I did in December about that. It's a great video. I've had some comments and people reaching out saying they learned so much from that. So I highly recommend, because if you've got a little extra cash, it might make sense to buy down your rate to make that monthly payment much more affordable. All right, unemployment. November, Santa Clara County still holding at 2.4%. So it's bouncing up and down a little bit, a slight increase, but nothing crazy yet. Now, stay tuned. I'm going to get into condo market data if that's important to you, if you're in the lower price point. Okay, so here is the condo market. Supply is holding pretty good. Sales are down, but nothing crazy, and prices are down. So it's similar to what we're seeing in the single family home market. But, we didn't see the huge appreciation in the pandemic in the condo townhome market like we did in single families. So we're back even for a few years ago. So again, if you're going to be buying and getting into the market, it's really important you're buying something that you can live in for 7 years or more. I've got several videos talking about that. Reach out if you want to learn more about that. I'd be happy to sit down, have a one-on-one consultation with you, or a conversation to address your particular questions. You can text me directly, 408-839-4196. Okay. So here's the actual numbers for the condo market. The average price is down to $927, which has dropped a little bit. Sales price to list price ratio is still really close. Days of inventory, very healthy still, 39 days of inventory. So nothing crazy to worry about in this, but I want you to keep in mind a couple key things. That 39 days of inventory is still technically a seller's market. It's healthy. Buyers are not out there trying to buy as much. The demand isn't high at this time of year, but that's going to change. So this is a good place to be. Prices have already adjusted a lot for the interest rates. And San Jose generally has a housing shortage. Unemployment is low. There's many tech jobs with good salaries. So all of these factors are pouring into our real estate market. So if you're looking at buying anytime soon, I don't see a major crash happening. We definitely had an adjustment for those interest rates, but if you're buying long-term, it's a great time to buy. So definitely watch next the video I have about the market forecast I mentioned earlier. And if you're planning to buy or sell, let's connect one-on-one and see if I may be able to help you with your move. And if you want to stay informed with these charts and updates every month, sign up for my monthly email newsletter. I've got the URL below. Thank you so much for watching.